On your note about copper, you did upgrade your prices for the third quarter and for the whole year, right? But you're still cautious on the copper price. What gives you that caution when I barely see any analyst cautious on, say, copper anymore?
Yeah, that's right. Everybody seems to buy this thesis that copper is going to, $3.50, the incentive price to unlock new supply. The reason why we're cautious is because we look at the Chinese macroeconomy and we ask ourselves a very simple question. Is what's happening now sustainable? And we don't think it is. We think that in a world where China is curtailing industrial-driven growth, where they're lowering fixed asset investment, where they're trying to shift over into a retail-driven economy, a consumer-driven economy, this is not the same world that we saw in earlier this decade. And so as the Chinese demand picture starts to slow, I think we should start to see copper and other metals sell off. We're not bearish on copper, but cautious.
Yeah, sure. But one question mark to me are margins. And take a look at this Bloomberg terminal. This is dealing with steel margins in China. And they're really, really high. I mean, that's that bottom panel. They're incredibly high, meaning that they're going to keep buying iron ore. They're going to keep buying anything that they can. They're going to keep buying nickel if they want to turn out those margins. What changes the margin picture for them?
I absolutely agree with that chart. I think margins in the steel industry in China, they are high. They've remained high, and I think that they will be high for some time. But the key thing is that steel can switch on a dime. What we've seen so far this year, if you look at iron ore, when iron ore was around $90 per ton, we saw that massive sell-off into $50 a ton range. I think, and what we're looking at is the inventories within China. Steel inventories within China, they've been depleted. They're looking to restock and rebuild steel inventories. But I think once they reach a point where they have steel inventories, I think that pushes downward pressure on prices. And I think you go back to the dynamics that we saw in the second quarter.